Hello friends, welcome to my channel. This is my third video on the amendments applicable for May 17. Those who have subscribed my channel will get notified regarding the updates of my videos. So friends who haven't subscribed my channel, please subscribe for the updates of my videos. I'll be updating more videos on the amendments. This is the third video. To see earlier videos, go to my channel, and if you like this video, give a thumbs up. Welcome back guys. Come on, let's continue the discussion. Now we shall cover the amendments which are part of basic concepts. Number one is regarding rebate under section 87E. We know that according to Financial Act 2015, the rebate was 2000 or basic tax, whichever is lower, if the total income, gross total income is less than 5 lakhs, right guys? But after in 2016, according to the Finance Act 2016, the rebate applicable is not 2000, it is 5000, and the remaining all rules remain same. So let's move to the next amendment. Rates applicable for the company. We know that for Indian company it is a flat rate 30% according to Finance Act 2015, and for foreign company it is 40%, right? Okay guys, but according to Finance Act 2016, actually Modi government gave a promise to Indian companies that the rate of taxation, flat rate, they will decrease up to 25%. But at the time if they decrease from 30 to 25%, it would be problem, right? So they are reducing 1% each in every financial year, and as of now applicable rate for Finance Act 2016 is 29% if gross receipts are less than 5 crore. For as a sample, they gave this they made reduction from 30% to 20% for small companies whose gross receipts are less than 5 crore, and for gross receipts above 5 crore, the same rate 30% is applicable. If it becomes successful or no agitations will come, then they may apply this rate to all the companies, and it hasn't changed in the case of foreign companies. It is as it is, as 40% itself. And let's move further. The surcharge applicable also has changed. The surcharge applicable also has gone little bit change. Let's have a look guys. For total for individuals, HUF and AUP and BOI and artificial juridical person whose total income is greater than 1 crore but less than 10 crore, previously according to 2015 Finance Act it was 12%, and for greater than 10 crore also it was 12%, but according to 2016 Finance Act it is 15%. Here also it is 15%. Make a note of this guys, it's very important. And remaining they haven't changed, they remain same. There is no change in the rebates applicable for other cases. Okay, is it fine? Let's move to the next. Residential status. Residential status applicable. The rules regarding residential status, it hasn't changed anything, but the applicability has been deferred to one assessment year. Previously assessment year 15-16, previous year 15-16, the POM concept was applicable. The POM concept was applicable for the previous year 15-16 and for the assessment year 16-17. They had deferred this POM concept for the assessment year 17-18, that is for our attempt. So this POM concept, place of effective management, is applicable for our attempt, that is 17-18 assessment year. So nothing has changed, the section has been deferred for an assessment year. This is again it may change after 17 for the next attempt. As of now, remember that the POM concept, place of effective management, is the criteria for foreign company to decide the residential status. Nothing more from this section. Let's move to the further. Incomes which do not form part of total income. This is the next chapter, and let's see the amendments. In this chapter they have brought a new section has been introduced, that is section 1012A. Do you remember National Pension Scheme, NPS? Yes. Under NPS, if any employer, an employer and employee, they contribute to NPS, and we use it to get reduction under 80CCD, 80CCD1B. Do you remember all this? Yes, I think so. According to this, the contribution was allowed as deduction as of then when they have deposited. But according to this section 10 subsection 12A, while retiring or closure of this national pension scheme, whatever amount an employee gets, up to 40% of the amount what he gets is exempt. This is at the time of closure of national pension scheme or retiring or the cessation of the NPS, right? Let's move further. Section 10 subsection 15, gold monetization scheme. Are we aware it was introduced by Narendra Modi? Gold monetization scheme. Under this scheme, if we deposit gold, they give certificates for us. These are known as gold monetization certificates. Whatever interest we get from this gold monetization scheme is exempt under section 1015, and also one more amendment is brought that this gold monetization scheme is not to be included in capital asset. While discussing capital gains, we may come across this. Remember, for this, as of now, whatever capital gain from this from the sale of this gold monetization certificates is not taxable as capital gain. Remember this. While discussing capital gains, I'll come to this point once again. We shall move to the next section 10 subsection 22B, Press Trust of India. Actually 1022B is for news agencies. Whatever income is generated for news agencies, if it is applied in the same business, then it would be exempt, right? And yes guys, any income to the news agency, if it is applied in the same business, then it would be exempt. They covered Press Trust of India as a news agency, and for this Press Trust of India Limited, located in New Delhi, for the assessment years 16-17 to 18-19, whatever income is generated, if this income is applied in the same business of collection of the news, then this income would be exempt. That's it for this section. Let's go further. An important section and a big section is section 1023 FC and 1023 FD. To understand these sections, you need to know a little concept which I'm going to explain. You know, infrastructure companies build roads. They undergo infrastructure projects. For these infrastructure companies need huge investment, and it is a practice that the infrastructure companies may not generate huge incomes also, because of the price hikes. So normal individual won't invest in infrastructure companies. For this, a special purpose vehicles named Indian companies are formed to invest in these infrastructure companies. Where do these special purpose vehicles get money from? They get money from business trusts. What are these business trusts? These business trusts collect money from normal individuals. Individuals get units of business trust, like we get units from mutual funds. Individuals get units from business trust, and business trust gets shares. Since a special purpose vehicle is an Indian company, from special purpose vehicles, business trust gets shares. Business trust invests money in special purpose vehicles. Special purpose vehicles invest money in the infrastructure companies for the development of country. Right? Is this concept clear? Now what is this section tells? Section tells that whatever dividend generated on these shares to the business trust, dividend is exempt under section 1023 FC. Right? What about this section 1023 FD? Whatever income which is distributed to the individuals by business trusts, this is also exempt under section 1023 FD. Right? Is that clear, guys? If you have any doubts, comment please. Next, we shall move to the next section. Section 1023, section 10, subsection 34. Exemption. We know that under this section, dividend from the Indian company is exempt, but they have brought a limitation limitation on this exemption under section 115 BBDA. What is this limitation? The dividend up to 10 lakhs is exempt, and anything above the 10 lakhs would be taxable according to section 115 BBDA. For this section, nothing under this section would be applicable, right? Anything above 10 lakhs as dividend from Indian companies would be taxable. Okay, next, remember this, guys, it is very important. Next, section 10 subsection 38. We know this section. If any non-resident according to this section, the recognized stock exchanges located in international financial service centers and the investment is made in foreign currency, then whatever income is generated from this investment is exempt according to section 1038. But what is the amendment regarding in this section? The amendment is that the short-term capital gain, short-term gains from this investment are taxable now. They are excluded from this section. Only long-term gains are exempt. Remember, recognized stock exchange located in international financial service centers, and investment should be made using foreign currency. The short-term gains from this investment would be taxable and long-term gains would be exempt. This is previously also this section is there, but now as of now they made short-term gains taxable. Moving to the last amendment in the incomes which do not form a part of total income. This is a small one. Storage of crude oil, sale of crude oil. If any foreign company under the agreement or as notified by the central government stores or sells crude oil in India, any income generated is exempt under section 1048. Remember, guys, what are the conditions? This foreign company should be notified or any arrangement with the central government must be made for the storage of the crude oil and sale of the crude oil in India, and the income generated out of this sale or storage of the oil is exempt under section 1048. Thank you, guys. Let's meet in the next video. If you like the video, give a thumbs up. Please post your comments regarding the videos, and further video will be uploaded soon. Thank you.